is the so-called prime lending rate. It's that fancifully advertised rate that banks use as a reference or pegging point to sell bonds and loans to us. Just a giant bunch of untested BS. Why is it 350 basis points more than our much-deserved low repo rate? And isn't it high time that the South African Reserve Bank review all of this? Well, the very latest word from News 24 business journalist Garth Theunissen is that the Competition Commission's already looking into it.
To be honest, no one really wants to rattle the financial industry of a country. It can have all sorts of consequences. But to my surprise, an email arrived in my inbox and the Competition Commission has said they're running what they call a cartel investigation into the prime lending rate. And they say it's at an advanced stage, and it actually commenced in 2021. So that would suggest that we're quite possibly not too far away from them making a recommendation to the Competition Tribunal, which is the body who then decides, it's almost like a court that then decides whether the Commission's investigation has merit or not, and they can then pass judgment as to say, well, whether there's a case for sanction against the banks.
Later in our training topic, an alleged drunken driver in Cape Town turns on two cops trying to solicit a bribe from him. And finally, Britain upset the Commonwealth by selling apartheid South Africa arms, with On This Day in South African History heard later.
New episodes of The Lead air Monday through Thursday at 7 p.m.
In Rauby's pointless Braai quiz today, what's the current so-called prime lending rate? Do you know the figure? I'll give you the answer at the end of the show, and who knows, you might score a big prize. My name's Graham Robenheimer, this is The Lead, and this is the South African story. While moving to our top story today, our resident business journo on the job is Garth Theunissen. He's live on the line now from our Randburg studio. He's been rather busy today, fielding all sorts of questions and follow-ups in relation to this story. How's it, Garth? Welcome back to The Lead this 2026. I hope you're doing well.
Awesome. Thanks, Graham. Good to be here.
Absolutely. I think off the bat, let's try and make this sort of quite easy for the lead listener, the lay person. The Reserve Bank sets the repo rate. It's nice and low at the moment after consecutive repo rate cuts over the last 2 years or so. But for a long time, we've been aware of this prime lending rate as an indicator that the banks specifically use. I haven't given an awful lot of attention in the past, but you'll often hear when you apply for bonds or loans about prime -3 or prime +2. And you do kind of start wondering to yourself, is this just as they say in Afrikaans, a kop aan sit, or is this just like a fanciful way of advertising a new way to get a cheaper loan or whatever the case? Explain it to us like we're 7-year-olds, Garth.
Graham, in simple terms, the central bank, the SARB, sets the repo rate, and that's typically to manage the money supply, keep a handle on inflation, etc. And the banks can borrow from the central bank at the repo rate, and then they can add on a small margin and lend to the public. They can also borrow in the wholesale market, and there's a separate interbank rate, and that's typically a little bit above repo, and they can do the same thing, and they use that to fund their loans with a little margin. The odd thing in South Africa, though, is that there's this mystery prime lending rate, which is set at 350 basis points above the repo rate. And the reason I call it a mystery rate is because no one can tell me how or why exactly that 350 basis point differential is arrived at. And typically the banks like to scramble and say, oh, well, technically we don't use that as a basis for loan negotiation because we might give you prime minus, give you a rate concession, etc. But the opposite is also true, that they give you that some consumers are charged prime plus. So the bottom line is anyone who's ever walked into a bank and tried to negotiate a home loan rate, a car finance rate, will know that the negotiation starting point begins at the prime rate, which is set at this 350 basis point margin over repo. The problem is no one can explain the market forces that determine that 350 basis point differential.
Right, absolutely. So if anybody listening at this point, just to make it even simpler for all of us to understand, if you want to go and apply for a loan or a bond at this particular point, and somebody is saying to you, perhaps a bond originator is going out through the various banks to try and get you the best deal, will come back and say, I'm going to get you prime -1. That's not necessarily going to be the overall best deal, although banks do need to have the margin in order to be competitive anyway, right? And I think that's also important just to state, is that margin is not unprecedented. Of course, banks also want to make a profit, right?
Yeah, no, absolutely. No one's denying that banks need to make a profit, on their business of extending loans. The point I've been making is, why does it start off at this kind of assumed profit margin of 350 basis points?
Yeah.
Why are they not pricing it at, say, repo plus or the interbank rate plus, and then gauging your individual credit risk and using other factors to determine what risk premium is appropriate for granting, say, you as a customer a loan. The thing in South Africa is that all the banks start from this kind of assumed margin of 350 basis points. And everyone who's a banking customer will know, every time the repo rate changes, you'll get a notification from your bank going, right, we've all adjusted our prime lending rate in lockstep with this change in the repo rate. Now, the thing is, I've always wondered, well, how is this not anti-competitive? Because if there's any other industry and all the players in that industry adjust their prices in lockstep with each other, the Competition Commission is going to be all over them. So I've long asked, actually, why is it that the banking sector seems to get some sort of free pass from South African competition law?
Yeah, absolutely. Okay, so you went down this avenue, as any good journalist will do, to try and get everybody involved in the sector their right of reply. Did you go to the SA Reserve Bank first? Because ultimately it would assume, just from the top of my mind, that they would have some sort of fiduciary law here that would oversee what that so-called benchmarked margin would thus be. Take us through that journey of trying to find answers.
Absolutely. So the funny thing is everyone kind of assumes that the prime lending rate is set by the SARB, but that's not the case. Even though it's published on their website, we went to the SARB and we asked them, precisely this question: how is this 350 basis point margin justified or arrived at? What underpins it? What are the market forces that underpin it? And the SARB came back to us and said, well, this is not part of our competency. Please ask the commercial banks, because they set the prime rate. I then mailed all the big five banks, or the main mortgage providers in the country, and I asked them the same question. Virtually all of them ignored me. Standard Bank eventually came back to me and said, look, we've asked the Banking Association of South Africa to respond to you. That's the industry body. Nedbank, to its credit, came back with a fairly comprehensive response. But essentially, the Banking Association of South Africa then sent me a statement saying, no, it's not us, it's the SARB. So I politely pointed out to them that, well, that's interesting because your statement directly contradicts what the SARB told us. And I then mailed the SARB and I just forwarded them the BASA statement and said, why is BASA contradicting you? And I don't think it was 10 minutes, my phone rang and it was BASA saying, sorry, we're going to have to retract that statement. We got it wrong. And they then responded with a renewed statement, which was basically this mealy-mouthed thing saying, look, the prime rate is just a rate that's a premium over repo, and we use that as a reference point to lend to customers who are considered the best, the most creditworthy customers, i.e. prime customers, hence the name prime lending rate.
But Nedbank gave you a very interesting answer, because I always feel like historical precedents would help a lot here in trying to find some sense as to how this whole thing came about. What did they tell you?
To Nedbank's credit, they provided a fairly comprehensive answer. They denied that the prime rate is used as the reference, as the starting point of negotiations. They kind of claimed it's a sort of bottom-up decision-making process that takes in all these factors, ranging from the cost of funding, the client's risk profile, market conditions, etc. Personally, I don't buy that because, as I say, anyone who's walked into a bank to negotiate a loan knows that the prime rate is the starting point for the negotiation. But what Nedbank did point out is that this 350 basis point differential goes back all the way to at least 2001. So we know that this has been going on for at least just over 2 decades. But what baffles me is that not a single player in the financial industry seems to be able to point to the market forces or the market dynamics that underpin this kind of assumed starting point from which all retail loan negotiations in this country commence from. So to me, that's an open kind of prima facie case for at least someone like me to ask the question: hey, is this anti-competitive? The competition law experts can step in and tell me whether it is, but I think it's worth at least asking the question.
Well, on that note, you've got breaking news for us, which you've just filed a short while ago, and we've been keeping this for you, lead listeners. What can you reveal, Garth?
Given that I was writing on this, I did mail the Competition Commission and ask them, isn't this something you should be looking into? And to be honest, I kind of expected them to send me some sort of, sidestepping issue. And I thought they'd just avoid the issue because, to be honest, no one really wants to rattle the financial industry of a country. It can have all sorts of consequences. But to my surprise, an email arrived in my inbox, and the Competition Commission has said they are indeed investigating what they're running, what they call a cartel investigation into the prime lending rate. And they say it's at an advanced stage, and it actually commenced in 2021. So that would suggest that we're quite possibly not too far away from them making a recommendation to the Competition Tribunal, which is the body who then decides. It's almost like a court that then decides whether the Commission's investigation has merit or not, and they can then pass judgment as to say, well, whether there's a case for sanction against the banks or whoever they deem to be in violation of competition law.
Yeah, because at this point, if you just look at the News 24 readers responding to your trending article on the front page of News 24 today, which is entitled "Your High Mortgage, Saab and Banks Fumble to Expand Prime Interest Rate," a lot of the theme of the comments there speak to one thing. A lot of people are convinced that collusion, that banks have been colluding to keep this idea of that the prime lending rate should be 350 basis points higher than whatever the repo rate is at any point. That would now be tested, surely.
Absolutely. And the thing is, look, I don't want to sit here and make a big accusation against the banks. I'm asking the question. I'll let the competition authorities decide on which way the sword falls. But you got to remember, we have traditionally we had 4 big banks. With the emergence of Capitec, you can make it 5. You might expand it a little bit more, but basically we've got a very small banking sector who provide the majority of home loans in this country. If you compare that to a place like the US, okay, fair enough, it's a much bigger economy, but there are literally thousands of mortgage providers in the US. It's a much more competitive landscape. If, as I've outlined, these 4 or 5 major banks all seem to start their loan negotiations from exactly the same level, why would that not constitute anti-competitive behavior? It does, I must say, seem like a bit of an old boys club. And the fact that the financial sector has struggled so much to just provide an easily understandable answer as to how and why this 350 basis point differential between the repo and prime rate exists tells me that it most likely was a kind of gentleman's agreement in a dark room somewhere back in the day.
Yeah, that's exactly where my head went to as well. And again, we don't want to veer too hectically, obviously, into speculation here. I have a quick question. I have a bond, and I once went through a bond origination process. There's the argument that once you go through that process, the prime lending rate doesn't really matter because banks would obviously want your business if you have a good credit record. But then there's also the other side of things, and I saw this claim in one of our readers again, suggesting that when you do that and you go to the different financial services provider through that bond origination process, that also affects your credit rating So you can't really win as a consumer here. Do you know anything about that?
I'm with you. I mean, I remember once sitting down. I think I might have been moving home loans from one bank to the other because I was disgruntled with certain things, or I might have been looking for a better interest rate. I don't recall the exact reasons, but I remember sitting down in front of the consultant and asking them about this, and they had to do a whole lot of due diligence and ask my permission to do a credit score on me. And I was quite shocked. I was a lot younger at the time, but I was quite shocked when he opened up his mouth and said, "Oh, by the way, I'm just letting you know that the very fact that I'm going to do a credit check on you could count against you." Look, he probably used bad wording to explain it, but essentially what he was saying is if the banks see you shopping around for credit a lot, they see that as more risky because they obviously they're going to be asking themselves, well, why is this guy looking for money suddenly? So it can count against you. But the other thing is the frequent argument the banks use when you bring this sort of thing up and say, well, where does the prime rate come from, is they'll very quickly say, oh, but it doesn't really count because we can give you prime less. We can give you a rate concession saying prime less. Prime less, you mentioned prime less 1% earlier. In this day and age, you're probably more likely to get prime less half, whatever. But what they don't tell you is that they also frequently charge consumers prime plus. So there are a lot of consumers, some of whom I know, who have mortgages for 20 years where they're being charged at the prime rate plus a premium. So again, the question arises, why do we have this assumed starting point called the prime lending rate, which is fixed at 350 basis points above repo? Who decides on that 350 basis point margin? What are the market forces that determine it? I'm struggling to get an answer from the industry.
Let's just end it here, Garth, because I think we've covered all bases. But to anybody who's listening thus far and they're going, why are these two pod bros now discussing all of this in the beginning of 2026? We've been a democracy for a really long time now. This should have been a long-standing issue that gets brought up every year. To answer that question, you've been on this trail for a really long time, have you not? And getting answers hasn't really been easy because, as you say, there may be this old boys club that doesn't want people asking too many questions or to come knocking too frequently. Sure.
Yeah, absolutely. So look, I mean, first things first, let's give credit to Bloomberg wrote a story this week revealing that the SARB was looking at just so they've brought this back to the fore. But I wrote a column for the old FinWeek magazine, which is sadly now defunct. I wrote a column back in 2012 called The Mystery of the Prime Lending Rate. And I still remember my intro was something sarcastic like, it's not the Bermuda Triangle, that's the big mystery. It's where does the prime lending rate come from? And my argument is quite similar to what I've outlined in this discussion. And then the answer back then was much the same. No one could really tell me where this thing came from. But if your listeners are wondering why are we talking about it and why are we making a big thing about it, is because it hits consumers in their pockets. Now, one of the arguments that's come back to me from analysts in the banking sector is they've kind of said, well, look, even if the prime lending rate were to be scrapped, and banks use some other measure, say a repo plus a margin interest rate charge or a interbank rate plus a margin charge, it might only shave off a few basis points off your loan anyway. So it's not that big a deal. My response is, well, yes, factor that over the course of a 20-year mortgage. Some people even have 30-year mortgages. And trust me, it is material. And then multiply that across the entire economy, and it's very material. So I think this is an important thing. And quite frankly, I'm astounded that it has taken this long for the authorities to look into it.
Yeah, and just to add to your point to end off, Garth, from my perspective as well, removing the lexicon of prime lending rate will also make it easier for all of us to understand the complexities of applying for a bond or another loan or whatever the case. It will make it easier to understand what exactly I'm paying the bank every month to get this advancement of money.
Yeah, look, I think there is a case for consumer education and consumer awareness. I think there always will be some name given to whatever the other, whatever reference rate is used by the banks. But I think what we all want as borrowers is just transparency from our banks in terms of why are we being charged this. where does this interest rate premium over the repo rate come from? How do you arrive at it? What are the market forces that determine it? And most importantly, is it just and fair? Because on the face of it, I would argue it doesn't look very fair at the moment to me.
Any basis for when we know the Competition Commission is due to, begin formal hearings or anything like that? If they say that there's been this long-standing probe for a while now, do we know any sort of timelines just to end off?
At this point, they haven't given me any timelines other than to say the investigation started in 2021. It's at an advanced stage. So one would assume that we are, probably nearer rather than further from some kind of recommendation from the Commission. Whether the tribunal takes it further or whether there's anything to come out of this in future, I don't know. But the fact that the Reserve Bank has gone on record to say they're looking into it tells me that something is up and there may be some changes coming in the future.
Absolutely fantastic business journalism reporting from you, Garth. Thank you so much for coming on to the lead, explaining all of this to us. Let's hope this can all crack that supposed, prime lending rate boys club once and for all, and make things a lot easier for the next bond and loan applicant who comes along and wants to make a better life for themselves in South Africa today. I really appreciate your time.
Excellent. Thanks so much, Graham. Good to be here.
You're listening to the latest edition of The Lead on News 24 with Graham Rowenheimer. If you've got an opinion on what you've heard so far, drop us a short voice note on our WhatsApp hotline. That's 072 562 3179. Trending topic.
Moving to our trending topic, and it's a headline you don't often see in Cape Town these days, but it appears corruption abounds everywhere in Mzansi. 2 city law enforcement officials face suspension now from the force after allegedly soliciting a bribe from a drunken driver. It's understood that just last week, Monday night, the pair pulled over this motorist in question on Voortrekker Road in Parow. Now, the driver could not produce a license for himself or the car either, so it's alleged that the pair of officers then demanded a 3,000 Rand bribe. And when this motorist could not cough up on the spot, they made a deal to get the money from him later. Now, they apparently took a video of this driver and then saved their numbers on his phone. Now, in a surprising turn of events, the motorist then himself headed to the SAPS anti-corruption unit to report this, and its officers then decided to set up an undercover sting operation. Now, the officers handed the motorist marked notes, helped him set up a meeting point with the alleged bad apples, and it's understood that when they arrived just last night, they accepted this money and then deleted the video before the SAPS anti-corruption unit swooped in and arrested the pair. Here's City Law Enforcement spokesperson Wayne Dyson.
This incident is incredibly disappointing, but the city will not tolerate such behavior and will cooperate closely with SAPS in their investigation. The officers will be served with suspension notices when they are released from custody.
And
finally, on this day in South African history, that's the 14th of January 1971. Well, on this very day, a major rift opened within the British Commonwealth at a heads of state meeting in Singapore. Britain had proposed selling arms to apartheid South Africa, sparking fierce opposition from several member states at the time and threatening to fracture the Commonwealth itself. An 8-country study group was set up to review it. Britain soon ignored the process and in February went ahead and approved the sale of 7 Wasp helicopters to South Africa without warning. The move outraged anti-apartheid leaders across Africa and triggered protests led by the anti-apartheid movement in London, further isolating Britain over its stance on apartheid South Africa. Time now for Rauby's pointless Braai quiz. We asked, what's the current so-called prime lending rate? That's the actual percentage, the rate itself. And the answer is 10.25%. If this was your answer, I'm not going to say congratulations because we don't need a prime lending rate in any case. But if you did get it right, you still score absolutely nothing, except perhaps this quiet satisfaction of sounding very informed around the Braai. And some say, hey, that's pretty priceless indeed. Got more to share about how we currently conduct the lead? Send us a mail at thelead@24.com. This show is meticulously researched, produced, presented, edited, fact-checked every single day for you, our News 24 audience. It's also quality-checked by our News 24 Deputy Multimedia Editor, Simon Sonicus. In fact, there's a team of us that ensure that what you're hearing now is of the top global quality when it comes to news podcasts in South Africa today. We're also governed by the press code of this very country. So if there's anything that you feel or take umbrage with in anything that you've heard within the lead, please feel free to get in touch with the Broadcasting Complaints Commission of South Africa, or indeed by submitting a formal complaint to the Press Ombudsman. We take massive pride in what we do, and it's an absolute privilege to bring you this show every single day. My name's Graham Robenheimer, and so long as there's trusted news first, we'll have the lead.